Thank you very much indeed. And it's a great pleasure to be here today. So thank you very much indeed for the Digital Euro Conference for having me speak. And I'm really looking forward to going through some of the progress that we've been making in Switzerland with you guys, as I think it's certainly worth sharing some of our understanding and what we've managed to achieve. So I'll start with a show of hands, because I have been told that one of the ways you do a speech, you try and engage the audience and make them wake up and pay attention to you. So I was going to ask, so hands up if you think that in a developed Western economy there's actually a wholesale CBDC somewhere in production. So it's a meager show of hands, because the answer is there is one, and it's in Switzerland, and we've been in production now as a result of what's called the Project Helvetia pilot. We've been in production with wholesale CBDC since December of 2023, and we've issued something in the region of almost 1 billion francs worth of bonds at this point in time. So I wanted to share with you how we got there, because although Switzerland is not the size of Europe when it comes to the economy and population and so on, I think that it more than makes up for that in terms of innovation and forward thinking and some of the sort of structural aspects of the country which has enabled us to get to where we are today. So first of all, who do I work for? What do I do? I work for SIX Digital Exchange. I'm the head of SIX Digital Exchange. I've been on board since October of 2021. It's a wholly owned business of SIX Group, and SIX is the financial market infrastructure provider for Switzerland. Now, Switzerland's a little different to other countries in that a lot of the activities, a lot of the financial market infrastructure, specifically things like the RTGS system, so the interbank clearing system, and the repo platform are actually run by, from a technical perspective, they're run by SIX on behalf of the SMB. The SMB operates them, and that's kind of an unusual situation. There's a lot of public-private partnership that goes on between the Swiss National Bank and the FMI. And as a result of that, there has been this opportunity to do a lot of orchestration around innovation between the Swiss National Bank and the financial market infrastructure provider and the market participants. So basically leveraging SDX as a vehicle for orchestrating the transformation of digital assets within the Swiss financial center. And that's enabled us to achieve a substantial number of industry firsts. So SDX became the first regulated, first FMI to be granted a license to run a CSD on a blockchain infrastructure anywhere in the world. We were the first FMI to issue a digital bond on regulated blockchain infrastructure, the first to issue a regulated, issue a digital equity, and ultimately the first to settle in wholesale CBDC on regulated blockchain. So, and why do we get there, and how do we get there? In addition to this relationship that we have with the Swiss National Bank, I think it's also, as a lot of people I'm sure here are aware, Switzerland has a long history, as far as that can be the case in digital assets, of providing a very supportive environment for crypto. We have the Crypto Valley. There's a lot of foundations that are set up in Switzerland. So it's from a regulatory perspective, and ultimately that's then led to having a big pool of talent. That's meant that it's really enabled it to achieve a substantial amount that we could then bring over from that crypto space into the traditional financial market space and move the needle really when it came to adoption. So where we are today is we have 15 or so participants onboarded onto our central securities depository, which is more than, we're heading in the right direction. That's more than about 10% of what we have on the traditional CSD. We're currently onboarding an additional 5 at this point in time, so it's accelerating. So you can see the direction of travel that we're going in. And they're all the names you'd expect to see in Switzerland, but we're also now seeing our first international issuers coming on board. So we have Commerzbank joined the platform last year, and as part of the CBDC initiative as well. And we'll see before the end of the year, well, before the end of the half year this year, our first American bank coming on board. And we have also our first Asian entity came onto the platform last year, which is SBI Digital Markets. As I said, we have about 1.5 billion francs of bonds having been issued so far. We have another one being settled tomorrow, which will bring us up to be above 1.6, almost 1.7. And then we have these 4 critical wholesale CBDC projects that we've been involved in with the Swiss National Bank. So what have we been doing to kind of get there? What have we been building to actually get to this point in time? And there's been a lot of talk about, I think, in the abstract around the sort of the components that are required to achieve this sort of the building out of this financial architecture for digital capital markets. So I would start with what we had in Switzerland for many years, which was clear and effective digital securities regulation. So we're very fortunate that the regulation that was already in place in Switzerland was actually very supportive of digital ledger or blockchain-based technology providing the same sort of functionality as we had within the traditional, or the same legal kind of constructs as we have within the traditional infrastructure. So we started with already having that sort of substructure. And what we're talking about here is how do I get from, how do I actually take advantage ultimately of the innovation that the blockchain represents? And how do I get to the point where I can actually deliver services in the traditional financial space that can depend upon that blockchain and ultimately be able to benefit from the inherent benefits, the technology sort of differentiation that you get with blockchain that we see so much happening in the crypto space. So we see DeFi, we see sort of we see sort of instantaneous mobilization of collateral and so on. How do we enable that? And that's a step that requires a substantial amount of foundational building, of substructure building before we get to that point in time. So we had in Switzerland this clear and effective digital securities regulation that enabled us then to get a license to operate a blockchain, which would then facilitate or provide certain services which our members could then take advantage of, and in a way that they knew that they were going to be in regulatory compliance around. Now, as has come up a number of times in previous conversations today, the wholesale CBDC component, we believe, and certainly that's the result of our experience, is a foundational piece of financial market infrastructure for us. In the context of financial market infrastructure, it's a bit different in blockchain than it is in traditional finance. In traditional finance, the separation of the payment leg in terms of systems and operations and services is a very distinctive aspect of traditional finance. In the case of blockchain, it becomes an integral part of the infrastructure because you need to really take advantage of the opportunity that blockchain represents, you need to have the settlement asset on the same ledger as your investment asset. Once you have that in place, then you can do a whole bunch of really exciting things around programmability, instant settlement or precision settlement, composability, and so on and so on and so on, that you can kind of see a hint of if you have a trigger mechanism, but you can't really take advantage of the full functionality unless you have that ability to swap a settlement asset with the investment asset on the same ledger. And so we very early on determined that was going to be a real prerequisite for the overall architecture that we needed to build. And then on top of that, a critical mass of participants is clearly important. It's just a Metcalfe's law type analogy where you need to get participants onto your blockchain so that services that you're providing or issuances that are being made into that environment can benefit an ever increasing number of participants. And then once you've reached that level, in fact, I'll go back to one. Then we have interoperability, which is also really key. So interoperability with traditional market infrastructure. And I have concrete examples of how this has worked in our evolution. Standing this up as a separate piece of infrastructure outside of the traditional infrastructure causes all sorts of problems especially around sort of cold start issues, actually getting benefits to be delivered to participants. So interoperability, I think, with traditional market infrastructure is not just required to get moving in the first place, but I think ultimately to be able to deliver services to customers within this space, you need to be able to do that in a way that is relatively low friction. We're not talking about a set of participants when we're talking about traditional financial market participants who are very keen on completely new services, completely new interfaces, having to look at new work streams to actually support innovation. They want to be able to have delivered through the same interfaces, the same services that they are used to receiving services via, innovation that's supported by this technology. And that interoperability, therefore, becomes of crucial importance. And then, as I mentioned, a critical mass of participants on board. And at that point, now you can begin, and it's after all of those previous steps, now you can begin to actually deliver services where the underlying blockchain is really able to be, the benefits that are intrinsic to that technology can be delivered. Because without having everything underneath it, you can't really get there. So at that point, now you've got the ability to deliver collateral management services, fractionalization, and so on. And that's very much where we are now with SDX. Having built all the substructure, we're now at the point where we can deliver services which outcompete the traditional. But without having got there in the first place, then you really are unable to actually go forwards with new functionality. So drilling down a bit on the CBDC side of things. So we've been involved with the Swiss National Bank in two projects, one of which has been a 5-year-long project now, which is Helvetia, and the other one, which is Project Eura. So Helvetia is all around tokenizing central bank digital currency. The initial project, the phase 1 was technically, could we do it? So just using the SDX blockchain to tokenize central bank money in a test environment. In phase 2, we also involved a whole slew of market participants. And at the end of phase 2, we proved that we could, and the SNB could, operationally and legally and technically, and with full integration to the bank's core banking systems, tokenize central bank money and settle transactions, again, in a test environment. Then the Project Helvetia phase 3 was where we actually began to settle wholesale CBDC in production. And as of December of last year, we settled something in the region of 1 billion francs worth of bonds so far in wholesale CBDC, and that is the sort of standard mechanism by which we now carry out settlement on the SDX blockchain. It's called the Helvetia pilot. That's the sort of internal process that the SNB goes through as it heads towards this sort of full production. And at this point in time, we are intending to be able to support everything that we can do on CBDC that we could do with a traditional central bank money, but it's going to take, obviously, it's a multi-phase approach. It takes quite a lot of time. And as you go along, it's already around learning. And this is very much the sort of experience that we've had. So we've been, over time, evolving our platform. And the way that we have evolved is through issuance of bonds. So I don't think that bonds themselves are the most exciting instrument in the world for tokenization, but there are a lot of them. And they do keep coming, which is very helpful. So it acts a bit like ammunition to help you innovate. So in November of 2021, we issued our first bond, which was actually SIX's own bond. And although it was very innovative and revolutionary and groundbreaking, and we got awards and stuff, which was fantastic, it was by no means the sort of the end of the story. It was really sort of opened up the possibility of really understanding what we'd need to actually scale this up. So it was a dual tranche bond. It had a physical component as well as a traditional component. The interoperability between those two was manual. If you wanted to move from digital to traditional, it actually took more than a day, so not particularly elegant from that perspective. And 2 ISINs, and therefore a bit of a pain for the investor community to handle, for treasuries to handle. But off the back of it, we had a whole slew of requirements that came from our members, and our initial members being UBS, Credit Suisse, and ZKB. About what would be required to scale up this solution or to scale up the offering. And as we went along, we basically kind of checked off all the boxes that our members had put down as being prerequisites for scaling. And the first one was interoperability with the traditional infrastructure. So we only had 3 members on the platform that represented something around 65, 70% investor community in Switzerland. So it meant that as an issuer, you were very restricted in terms of who you were going to have on the other side of your issuance, the attractiveness of your issuance, and that would affect the price, and therefore, from a fiduciary perspective, was going to be an impediment to actually getting new issuances onto the platform. So we built a bridge between the SDX CSD and the traditional CSD, so that when you issued on SDX onto the blockchain, you could also trade and settle that on the traditional infrastructure. So it's a bridge between SDX and 6 SIS, the traditional CSD. So again, another industry first, so a bond that could be issued on blockchain but could be traded and settled on traditional FMI. That alone enabled us to get a bond issuance out of UBS. So that was one of the largest ones we've done, which is 375 million in November of 2022. The bond is also dual listed, so you can both trade and settle it. You can trade it on SDX, you can trade it on 6 SIS. Also nicely won some awards. But the other piece that was really critical for that was that we went through a long process with Moody's to establish that there was no impact on the risk rating of the bonds that were being issued, so that when they were issued on blockchain versus traditional infrastructure, which meant that, again, from the perspective of this being our equivalent to traditional, we checked that box as well. But the real challenge that we had was that was sort of slightly beyond our control, was that we needed to have a way to address the restrictions that we had on the cash leg. So prior to the CBDC being available on SDX, you as a participant could deposit Swiss francs with SDX. We had an account at the Swiss National Bank, and we issued tokenized Swiss francs to enable you then to settle transactions on the blockchain. The challenge with that is that, and it's a challenge with all forms of private money, and why CBDCs are critical to the scaling up of this infrastructure, is that that is commercial bank money. You have a risk with the issuer, which is SDX in that instance, even though we have our account at the SNB. We had a number of options we looked at to try and mitigate that risk, which was, for instance, bankruptcy, remote setup, and so on. There was nothing that we could identify that would eliminate both settlement risk, with counterparty risk, and liquidity risk. So if we had a bankruptcy remote vehicle, that meant that you would eventually get your cash back in the event that we as SDX went bankrupt. But in the intervening period, you could not retreat, you could not detokenize, you couldn't get access to your liquidity. So you always had a liquidity risk. So this is why we believe very strongly that at the base of this entire infrastructure that we're talking about in the financial markets context, you need to have a riskless settlement asset, because otherwise you'll have an inherent counterparty or liquidity risk built into it. And that's what comes with, unfortunately, every other form of tokenized money that exists out there, whether it's a stable coin or a deposit token or a synthetic CBDC. So it was only as a result of, I think, the ambition of the Swiss National Bank that we managed to get that particular problem sorted, and actually enabled the tokenization of central bank money on chain, and now have what essentially is an equivalent financial market infrastructure to what you have today. And going back to my previous slide, will then enable us as a capital market participants to adopt this technology in the most sort of effective way possible. I think that my hat goes off to the Swiss National Bank for their ambition in this space, and that certainly paved the way for other projects that we're involved in, such as Project Agora, which again is taking a lot of the learnings that we have had through Project Helvetia and what we've done with SDX into a broader context where we're looking at tokenized central bank money for cross-border as well. But it's enabled us really to get to where we are today, and as I said before, that is the substructure that then enables us to really begin to explore the superstructure, which is where the benefits of this technology ultimately can be realized. And those benefits are, what we've been targeting all along. So I have 23 seconds left. So I'll thank you all very, very much indeed for your attention and the opportunity to speak to you about this. Thank you.